Anand Deshpande, founder and CMD at Persistent Systems, joins in to talk about their earnings. Anand, hi, morning. Steady growth that you've had in services and digital, which is positive, but 17% sequential decline in IBM Alliance reflects volatility, an important part of the business. Will such challenges continue near term, and how does it that you see Q1 pan out in comparison?
Okay, so very briefly, our financial numbers for the year were $480.9 million, which was a 2.2% growth. And in the quarter, we had $118.3 million, which was a 2.1% negative growth. Now, if you really parse out on the numbers for this quarter, clearly the IP revenues going down were the main reason why this quarter was softer than the previous one. And there is a known seasonal volatility that we have in the even quarters for us, which is why this quarter's IP revenues have been lower than the previous one. We do expect these IP revenues to be a lot better in in the odd quarters, and in the odd quarter for us, so Q1 and Q3. So I do expect that number to be significantly better in the next quarter for sure. In terms of our challenges with the largest customer, they will continue for some more time, but I think we have invested in business around in the ecosystem, and that's starting to look better. So we do see a good pipeline on some of the resale opportunities that we have in this market.
Okay. While your Q4 bottom line was aided by other income and lower tax rate, EBITDA margins dropped 450 basis points sequentially. How much was the impact of decline in IBM Alliance business on the margins as part of other weighing factors?
Clearly, there is some impact from the fact that the IP revenues have a direct impact, which in the sense that if you get better IP revenues, most of that flows in directly to the bottom line. But overall, the efficiency of the business, the utilization numbers, all the other parameters that we typically track for profitability have been quite positive this year. If you look at on a year-on-year basis, our EBITDA has gone up by actually 200 basis points. And also in this quarter, some of the PAT numbers being lower are because of the ILFS number that we had provided for, which is about 18.3 crores.
Have EBITDA margins bottomed out in Q4? Currency tailwinds have also retreated, wage hikes, visa costs. These will be headwinds in the near term. What recovery are you working towards and aiming for in terms of FY20?
So I think overall our rates are starting to improve as well, and that's going to help in the recovery. And the other thing is that we have hired in the second half of this financial year for the next year as well, and we do expect that utilization rates will also improve. And overall, when you have higher growth in the system, that sort of is able to balance out the extra costs that we will see for visa expenses. Our salary hikes actually come in mostly from July onwards, so they'll not impact Q1, but they will impact Q2 onwards.
You also appointed Christopher O'Connor as CEO with immediate effect and brought in Sandeep Kalra as President of Tech Services. Sales, execution, these will be key focus areas, I guess. But what's the mandate that's been given to them in the medium term?
No, so I think Chris has joined on Feb 25th. He has been in the business for about 2 months now, and he's been looking at all the internal systems and everything else. And his charter is, of course, to increase the growth rate. He has a very good understanding of the IBM ecosystem, and also having worked at IBM, he is fully familiar with that. Sandeep brings in expertise in the, this OPD and the services business that is predominantly Persistent's business. So I think their combination would be what we are looking at for the next year. And I do expect, that some of our internal challenges have been addressed as well. So we do expect significant growth next year.
Mr. Deshpande, you've added over 1,060 employees over the last 9 months, and that's a fairly positive indicator of demand growth. So how are client budgets looking this year compared to the last, and what exactly is your expectation from the US, your digital IP-led businesses?
I think overall the market continues to be fairly strong. There are companies, most of our customers are going through changes in the sense that they are moving their workloads to the cloud. There's a lot of data and data integration work going on. So there is a very healthy business outlook in the context of the market, and I think we are seeing some of it in our growth rates that you see on services and digital. See, one of the changes that you will also notice is that the offshore business mix has gone up as compared to the previous one. And some of this has to do with the challenges that are there in hiring in the US market. But that contributes to slower growth rates but improved profitability. So overall, that's also a fairly good sign that we are seeing more and more offshore business happening.
Okay. Now, your FY19 dollar revenue growth of 2.2% is the weakest in the mid-cap sector, and only half of that was organic. Will FY20 be another year of single-digit growth?
No, clearly we have to demonstrate our growth through numbers on a quarter-on-quarter basis, and it's really hard for me to really make a projection at this moment. But we are seeing very good pipeline. Some of the challenges that we had during this quarter were mainly internal. And I do expect that having addressed them, we should see a fairly good growth in the financial year of the next year. But again, it's one quarter at a time. We will be able to show some numbers in Q1 and then add on to it as we go along for the next 3 quarters after that.
Right. So of the 225 crore rupees that was being used for an open market buyback, how much has been done till now? And you've got around 1,500 crore rupees net cash on your books. What is the utilization plan for inorganic growth this year?
Correct. So far we have used about 58% of the buyback of the 225 crores that we had allocated for buyback. And we will complete the rest in the next month or so. In terms of the cash position, yes, we have about nearly 1,500 crores or $215 million in the kitty, and we do expect to do some inorganic growth to fill in specific gaps in the context of trying to build some more domain expertise in specific areas, and also looking at markets in other geographies such as European markets.
Okay, great to have you on the show, Anand. Thanks so much for giving us perspective on how the Q4 numbers have been and what's likely to be seen in Q1 going forward.